trading newsletters.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, the day before the 4th of July was supposed to be positive, and the Dow was up 200 with about an hour to go into the close. Actually made a new high. Which really surprised me because when I looked at the charts of some of the Dow stocks, I don't see that. So I don't I don't believe it. But anyway, it did. If you look at Goldman Sachs, the largest weighted thing in the Dow Jones, which is a price-weighted average, it barely made the 382 retracement. So I would be a little skeptical of that. But, remember, I'm the one who didn't believe in color TVs and microwave ovens until many years later. Anyway, keep an eye on that. The other thing that happened overnight that's interesting is that we did hit a 61% retracement exactly in the heating oil contract, and we missed it in the crude oil by about 30 pips. I don't know if that means anything, but they've been up 9 days in a row as of last night, and so they are due for a correction. How much? We'll have to wait and see. I hear the news that, something about Russia and oil and stuff, but, frankly, folks, I look at the numbers, and that's really it. We're going to have Bill Meridian from Cycles Research of Vienna, Austria, is going to be our guest today at the break, and then tomorrow we'll have Norm Winsky on to do that. Folks, when you look at the stuff from Bill Meridian today, you're going to notice the timer of the year. He was the timer of the year in 2016, and you'll also see number 3rd place was our good friend Stan Harley. And then if you remember, we had Bob Miner on recently, and he was in the top 15 this year. He made it into the top 5 last year. So that's we do have some good guests on here, even if they're not ranked there, because some people don't like to get involved with it for 1,000 different reasons, all of which I understand. But at least we're getting some quality people that give us some pretty good information. The other indexes, the Dow Jones made new highs, of course. The NASDAQ was, down about 30 points at the time the NASDAQ was doing that. And today the NASDAQ is a little bit stronger. It's basically been extremely oversold, and it certainly looks like it wants to, to go a lot lower is what we're, keeping an eye on. The other one that we've been talking about last week, and we talked about it on Monday's show, and that was the euro. And we were right up against that 78% level at the 114.45. We closed at 114.27. And in the first 4 days of the week, first 3 days of the week, we've dropped a little over 110 pips. We've got down to 131.10 so far. And what's going to be interesting is we get to this 112.90 level. That's the area of that old breakout. That should be a spot where you should get some support in the euro, because if you don't, you'll start to see, a cascade. If you'll notice these 3 really dark maroon lines that you see there that represent the swings from February to July and November through April, and then also December through June, they're all almost very equal. The last 2 are absolutely perfect. The first one is off by just a little bit. But if you notice, after those highs were made, there was a vicious break, of several thousand, $3,000 to $4,000 before the market was able to rally again. So whether that's going to be this type of scenario or not, I'm not sure, but it started the right way. If you happen to do that trade, you certainly want to put your stop at break even and not worry about any losses that could be happening. Now, as we talked about last week, we were looking at the gold market, and we did get down. Let's just put this up here, and we'll take a look at it. This is where we are. Oh, I did something wrong here. Bear with me here 1 second, folks. I hit the wrong button. Always not a good thing to do. We'll take a look at this gold chart. As you can see, here's where we were We broke through. If you'll notice that little sloping trend line around the 1240 level, that was that last area of support, and of course we popped through that. We did get down to 112. 16.7 this morning, and we're only trading at 1217 right now, folks. This market certainly looks like it wants to go lower to me. If it surprises me from here, my hat's off to it. But it just looks. It just doesn't look that bullish. And believe me, long term, I love gold and silver, always have. But short term, it just does not look like it wants to turn up. I believe we're going to take out that low at the 1214 level that we made last year in May. That's 12-month low. That would be the time to, maybe to take a look at it, but certainly not here. And silver's broken below all perceivable support, that we saw. It was around 1620. So it looks like, it certainly wants, to move a little bit lower. And that's really what we're watching. So anyway, just keep in mind, this chart here that we've got here is not quite up to date. This is the one from Monday. Give me 1 second, and we'll put it up in here, because this morning's chart, we did get down to 1216 and change, and I believe we're trading right near that right now. Let's just double check it. Well, we got down just recently to 1217.20. We're at 1218.20 right now. So there's no bounce. Even when it bounced last night after making a new low, it could only rally $9 an ounce. I mean, that's nothing. So it appears that this thing really wants to, move to the downside. That's the way it looks from here in the Tucson area. Anyway, we'll watch it very, very closely, and we'll see, what's going to happen with it. Silver looks exactly the same way. There's been a few questions about the soybeans. Folks, the soybeans are they're in a weather market. I don't know how they're going to open today, because they closed extremely strong, and you just don't know what direction it's going to be. And believe me, weather markets turn flat out on a dime, and you unless you're really prepared and you're really nimble, you're going to get banged around. And I don't recommend those for the neophyte traders for sure. You just have to be extremely careful when you're dealing in these weather markets. That's the whole key, to be watching that. So, and the wheat is the same way. And wheat's had a monster move. Look at this wheat. Look at this wheat move, folks. That we hold. Let's get this up here, and we'll take a quick look at it. You can see where wheat is. Wheat has, look, we had the report that came out. You can see that, and you can see the gap that we have there. We got a 5-cent gap in wheat from Friday, and it closed almost limit up in December wheat. And, this is a weather market. And when it turns, it's going to turn with a vengeance. You wait till it turns. You can't go up there and try to pick a top in weather markets, because if those pressure centers set there over the Midwest for weeks like they can, these things could go like they did in the old days. They could go, $2 or $3 a bushel before they even let you get in. That doesn't happen very often because of the expanded limits we have now. But that's the main thing. Now, we're going to have another chart that I want to share with you from one of our folks that forwarded on to me. But right now, we'll take a little break. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry, powered by the acclaimed TAS TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we want to take a look at this next chart. This comes from Business Insider. It was forwarded by one of our listeners. It's basically showing the sell side situation in stocks. In other words, when the professionals come in and start laying on the market. The problem with this is it doesn't, from my perspective, and believe me, I'm just looking at it from my perspective here. This chart basically doesn't follow the market nearly as clearly as I would like to see, because you can see this thing has been in a downtrend, for a long, long time. The problem is, the market has been going straight up. So I don't give this a lot of value. So I just wanted to forward. Those are the green markings that you see there. Those are the ones that I put in because of the fact that there is a trend line to the downside. But I don't see how you could possibly, you could do anything you like, but there's a lot of other things looking at it mathematically and other ways that you might want to think about the possibility of a major top here in the market. But this chart, I had really different feelings about even putting it up there, but it did look interesting. But the more and more I thought about it, it just doesn't seem to be following. The second alternative here is maybe I don't understand it, and that's probably the reason that I'm having trouble with it, because these are things I look at. The price charts, folks. That's all I look at. This stuff, other stuff. It's interesting, but boy, it just gets me confused. So that's the main reason, why I'm, keeping an eye on these things as we look at. We got a pretty strong market going this morning. In the NASDAQ, looks like we're going to be open up about 30 or 40 higher. Be higher in some of the other indices too, and maybe we go into new high ground. This is going to be really interesting because we're right over this Bradley date here, which is the big one. And we'll have Bill Meridian on at our break, and he'll be able to help us a little bit, I'm sure. But this is going to be very, very interesting because I was expecting this to be a bottom here, this week, and we're rallying now, and that usually means it's getting ready to go back to the normal size or to the inverted side on the Bradley model, and then we will see what's going to. Monday is going to be really interesting. By the way, folks, if you get a chance this weekend, go out and look in the night sky, because this is the most beautiful full moon you're going to see for the whole year. It's known as the thunder moon. And then also in the morning, those of you that get up and walk in the morning, look out and look at the moon, and you'll see the beautiful picture of Venus, especially when we have the new moon, which will be on about the 23rd or 24th of July. Take a look at that one, because Venus will be as beautiful as you can possibly see it with the naked eye. It's, it's really spectacular. These are the things that Galileo and Pythagoras and all those dudes that didn't have those fancy telescopes back in those days were looking at. So just keep an eye on it, because it's going to be a beautiful thing to watch. One of our questions that we had from one of our listeners over the weekend was what was going to happen, with the price of the Treasury bonds. Folks, the Treasury bonds, they can't get out of their own way. I mean, they don't have any friends at all now. Remember, just 2 weeks ago, everybody loved them, and now, the market is breaking. This is what we were looking at last Monday I keep thinking it's last Monday. Hold on just a second here, and we will see. 1 second. Let me get this up here so that I can take a quick look at it here. You'll notice that that 61% retracement came in at 153.04. That's pretty much where we're trading right now. We've been below it by just a little bit. But, again, we went back below it and we haven't rallied. And the German Bund is leading the market down. So that's another big thing that tells us that interest rates have most probably topped. But I think the most informative chart of anything that we have is the weekly chart of the Treasury bonds, and this really is indicative of a market that wants to go lower, i.e. higher interest rates. And you'll see that we made a 382 retracement in the bonds, and we've now broken down. We're getting close to the weekly lows of that 151 level. So this is a very bearish chart, folks. The only thing that would change this is if we would turn around and rally above that 157 level. That's 4 handles. I don't know what would cause the market to do that, but if it did, then that could be a bullish chart. But right now, this doesn't look very good. Frankly, what I think is happening, and I think some of these central banks have lost control of this Mickey Mouse game they've been playing with quantitative easing. That's just my guess, because this came right out of the blue. Well, not really out of the blue, because it was making a 382 retracement, and the market just gave up the ghost and had a chance, to really rally if it got above 157 on that breakout. But in fact, it really didn't. So I know, folks, you think I know where the bottom of the gold market is. I do not know. All I know is that looking at this chart, it just doesn't look. I know we made the major ABCD there. If you wanted to trade, I don't know if they agree with me or not, but we'll see. If you want to trade it up against this ABCD pattern that we looked at, let me just put this up here, right here. We did get down to we made the ABCD pattern perfectly. There's no question about that. The last time we made one of these, we rallied about $34 an ounce is where we rallied. So if we got to 12.18, we would rally back up into this resistance at around the 12.40 level. So that's what the possibility is. But again, this is not a bullish chart. I think we've reached a major price objective here. The problem is you're setting and looking at these stops over here in May at the the 12.14 level, and you get below there, that's not going to be a good sign for the gold market. Short term, we could certainly have a bounce. Longer term, I just can't be bullish on gold right here, right now. And I've looked at it several different ways. And let me just point out to you another way that I'm looking at it, because there is this possibility right here. And this is the daily cycle chart, which is a 39-week cycle, bottomed last week. Now, as you can see, as of Friday's, this was not Friday, this was as of yesterday. Let me see, 4th of July. Yeah, and it was as of yesterday. We still held those lows, so there is that possibility that you could make a case for a rally in gold from this level. And that's the only case that I can see. Silver does not have this picture at all, nor does platinum, but gold does have this final bullish picture. That's what we're looking at right now when it's trading at around 12.18. You're risking about $4 there if you're going to trade it. But that's a very low risk parameter. But everything has to fit together, and we'll see if what's going to happen. We're going to have Bill Meridian on here at the break here in just a minute, and we'll be all ready to go here as soon as we get this break coming up, and we'll go from there. So we got a break coming up anyway. Gold, we'll let Bill talk to us about gold. He's been spot on, and since he's the timer of the year of 2016, we should get some really good information from him as we come through. So we'll take a break. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we've got our good friend Bill Meridian of Psychos Research, Vienna, Austria. Bill, are you on the line?
Yes, I'm speaking to you from New York today.
Oh, New York. Aha. The old G7 got you over here. Hey, listen, buddy. I've got your whole presentation ready to go. We're on page 2 about the important turning point on the 7th.
Yes, these are day counts and Fibonacci expansions from former highs and lows.
Mm-hmm.
And the 7th shows up in numerous markets. I'm just mentioning 3 here, S&P, bonds, and gold. So given the current direction of the S&P, I would expect a high on the 7th. The bonds and gold, I would expect lows.
Mm-hmm.
So that is what I wanted. It just stood out that the 7th, as I said, in numerous markets popped out of the scan for turning points. So if we move to the next slide.
Okay.
We have a tale of 5 cycles.
Alrighty, just give me this one. Takes me 1 second to get these up because there we go. I'll be ready for the next one better. So.
Okay. The first one is the 1, 4, and 10-year cycle, which I've talked about before. And that is an addition of the annual cycle of the year, the 4-year, what has been called the election cycle, even though it works in countries where there are no elections at all, and then the 10-year decennial pattern of Edgar Lawrence Smith. And if you add the 3 of them together, which we'll see in a minute, they were pretty accurate. That is what I relied on most when I was ranked number 1 last year by Timer Digest. Mm-hmm. But it is supplemented by other cycles. So this is the year ending in a 7. And as Edgar Lawrence Smith said, there's never been a year ending in a 7 in which you either have not had a crisis or some sort of a sharp market pullback. 1987, 97, 2007 was a real tough one. So that's the second cycle, which we use to supplement the first one. Then 3 is the active cycles. That's spectral analysis. It extracts the currently active cycles out. Could be daily, weekly, monthly. Then it puts them back together and tests them for profitability. So we'll look at that. And then there's the 13-year cycle, which we'll get to. And the annual tech cycle is that technology tends to top as a sector in mid-August and decline until about mid-October. So if we move to the next slide, that's the 1, 4, 10-year cycle, the blue line. That's for this year. And you'll note it tops pretty soon. And to get a better picture of it, and it bottoms in late October. If you go to the next slide, we have a blow up so you can see it better. The high is actually on August 16th.
Okay, hold on. Let me get this up here so that I can see it. I'm trying to read them myself at the same time because it's so interesting to me. And okay, I think this is the one. We're on page 6, correct?
Page 5.
Oh, I thought he had it. Let's just do it again. Hold on.
1, 4, 10-year cycles in Q3.
Okay, I've got that. Now, you've got a little bit of a summer cold, I think, don't you?
I have a dreadful sore throat. So.
Oh, dear. Well, thanks for coming on. We appreciate it.
And so August 16th is the top in that cycle. So if we move to slide number 6, you will see this is all years ending in 7. In other words, 1887, 1897, 1907, I mean, all the way up through 2007. And you'll note that top is around July 15th or so, July 15, 20. And you'll notice it's a very steep decline. So this could cause, if you add them together, you should be looking for a correction no earlier than July 15th and no later than about August 20th. Mm-hmm. Now let's look at all active cycles. Now that was just run last night. That is daily Dow Jones from the year 1885, extracted with spectral analysis, run through a profitability test, and there we see a high on July 19th. So we're looking at it as one investment professional once said, an investment is like a diamond. It has many facets. You have to keep turning it and looking at all the facets, and you seek the weight of the evidence, as Stan Weinstein used to say in the old days. Now I'll add in one more. This cycle occurs every 13 years. Outer planet transits can have a strong effect on the market. Heliocentric Jupiter and Uranus, that's the sun-centered system rather than the Earth-centered system. They are 180 degrees apart on July 11th, and that is graphed below. So we'll look at that.
That's on 9, correct?
This is now page 9.
Okay, there we go.
So from 1885 to the present, we have had 9 of these, and 8 of them have dropped the market. And Larry, look at the percentage change. That's about 9-10%. That's pretty serious. and the green line is the actual date, which is July 11th. So if you back 30 days off of that, July 11th, you come to somewhere in middle of June. So this is already in effect. So adding all these together, Larry, I simply don't see anything pointing up. So the next question, when you do cycles analysis, here's where we get into quantitative and technical analysis. We want to confirm what we are seeing by the current market activity. And I think the most important thing we'll see on page 10 is, you know what a hook sell signal, I know Larry knows what a hook sell signal is. Yeah. If you go to a new high during a day and close below the close of the prior day, or it's reversed for lows, that's a hook sell signal. So Dr. James Neefsey at MIT took that and he refined it. I'm pretty sure, for those who are interested, that he used multiple discriminant analysis, a statistical test, to analyze the conditions prior to the hook sell signals, and he separated them into those that worked and those that didn't. So if you Google this, you can get all the conditions. But two of the conditions are a confirmation from a daily oscillator, in other words, a lower high in the oscillator versus the price, and on the day of the hook, the volume has got to exceed that of the prior 3-day moving average. So this is the condition in the NASDAQ 100 and in Facebook. And inside the NASDAQ 100, I counted 35 stocks are on one hook sell or the other. That's a third. And so let's take a look at, graphically, let's take a look at the Cambridge hook sell signal in Facebook. That's page 11.
Okay, hold on with me 1 second here. I've got to get back onto the page 11, and then I've got to do this and click on this, and then I'm ready to go. There you go.
Now, first, you see I have those two ovals at the top. Those are both hooks. It went to a new high during the day, but closed below the close of the previous day, not once but twice. Does the oscillator confirm by showing lower highs? Yes, it does. And look at the volume down at the bottom. The volume spikes were definitely greater than the moving average of the 3 prior days. So that's the Cambridge hook. Let's look now. This just occurred, and I just pushed this into the presentation on page 12. This is, you have page 12?
Yeah, page 12 is the weekly hook sell signals up. Should be up now.
It went, the NASDAQ itself on the week went to a new high, but closed below the close of the prior week. So that's pretty strong. So the evidence is mounting here. It's not a Cambridge hook, but it is a hook sell signal. So if I put all of this together, I cannot see the NASDAQ making a new high. I thought I had another slide in here. I guess I forgot and left it out. But it was actually an important one. The NASDAQ, how would this be negated? Well, if the NASDAQ, I did forget it, my apologies, but if the NASDAQ went to a new high, it would negate these effects. We've got an ad coming up.
Yeah, we do. We'll be right back with Bill Meridian of Cycles Research, coming from the hospital ward of Presbyterian Hospital in New York. I'm just joking, folks. He's got a bad cold. Stay with us, Bill.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors.
Will interest rates continue to rise? For bold trades on U.S. Treasuries, now may be time to take a closer look. Trade TMF or TMV, Directions Daily 20-plus year bull and bear 3 times ETFs, direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, with Bill Meridian of Cycles Research, and I believe we're on the August 21st solar eclipse chart.
Well, I tried sending you this price chart because I thought it's important, but the NASDAQ dropped. The graph should have been in here in early June, and then it rallied back. And at that point, if it hit a new high, it would have negated these hook sell signals. However, it got to exactly 78.6 on July 26 and immediately did another hook sell signal. So this to me now looks like the developing C wave or wave 3. And so that to me is a price confirmation that that the NASDAQ is headed lower. And by the way, if you run a bunch of quantitative analytics on the decline in June, I think it was June 8th or 9th, then the NASDAQ usually takes 30 days before it can recover and launch into a new uptrend. Well, if you add 30 days to early June, you're coming up very close to the July 15th, 20 cycle downturn dates. And one more month, you've got the S&P or the Dow Jones downturn date. So this is all starting to make a lot of sense. And I read a quantitative study that says if the NASDAQ goes down here, the odds are 2 and 3, it will pull the S&P and the Dow along with it. So this is in the process of developing. So my feeling is the high in the NASDAQ is behind us.
Bill, we have a question from one of our listeners, and that is regarding the NASDAQ and the Dow Jones, is which of you feel of those indices represents the market, with the Dow being, heavily biased and only price weighted? Do you have an opinion on that?
Well, yeah, the S&P, which is cap-weighted 500 stocks, or there's the value line, which is 1,600 or 1,700 stocks that are equally weighted. And that I don't have that graph in here, but I've had it in my recent reports, being an ex-value liner. That graph showed that the value line dropped 26% in 2015. So if somebody says there was no bear market, it was in most stocks that you don't know about. And what happened was that most stocks started outperforming the S&P 500 and the OEX 100 until a few months ago. And this to me is a sign of people getting cautious now, selling out of the smaller names and looking for safety in the bigger names.
Okay, that's great. Do you want to go on to the August 21st eclipse chart?
Well, as we get closer, the possible manifestations become a little more obvious. And if you recall, Larry, the last time we spoke, I said that the eclipse path, which is the next slide, cuts across the U.S., and I thought that this was signs of internal conflict, and then suddenly the summer of resistance was announced And I said, I think somebody's going to get hurt quite seriously. And was it Steve Scalise, the congressman in the ball field, was shot on the very
Yeah.
next day after the
Yeah.
broadcast. So I'm expecting that to get worse.
Wow.
And I'd like to tell you a story you're not going to read in the media, I don't think. But recently there's been a dispute with Qatar in the Middle East. Qatar, I had a look at it, the national sun is 8 degrees mutable sign. So the eclipse in September was conjunct the national sun. The eclipse in February was opposite the national sun. An eclipse opposite your sun usually means trouble. And the other countries are on them for giving money to terrorist groups. Well, 10 days ago, I was on the phone with the Middle East, and they told me that 25 falconers, it's like we go to bowl games, they jump in their desert vehicles, and they go and hunt in the desert. They set up a camp. And these guys went into southern Iraq, and 25 of them were captured by a terrorist group, including members of the Qatari royal family. So they paid a ransom of $1 billion to get these guys back. And that's where the money going to the terrorists come from. And Qatar is saying, we had to get our royal family members back. And the other countries are saying, yes, but you agreed not to do that. So
Wow.
that's what I heard. And so the eclipse, I don't have the lunar eclipse in here. Well, if you go to the next slide,
This will be number 15. Yes, I think that the 15 is the one we're on. Yeah.
Yeah, it's obvious. It's the only eclipse path in the whole pack. But the lunar eclipse coming up in the middle of August, that's around 14 or 15 Aquarius. It's in the same degree as that of August 6, 1990, which is when Saddam Hussein invaded Kuwait. And that chart hits all of what I call the very early charts for Kuwait, the UAE, when the Bedouins first moved into the area. And that's another presentation. But I was looking at it saying to myself, and Sheikh Zayed came to power August 6, 1990. This eclipse is August 7th, 2017, so it's on the national birthday. That's very important because in 1990, Saddam Hussein threatened the United Arab Emirates. Sheikh Rashid, the Sheikh of Dubai, who was the vice president of the country, died a few months later. And we got all the way through to June, and I said to my wife, only 2 more months to go. And this dreadful eclipse effect is over, and BCCI collapsed that month. So this has got a lot to do with, as you recall, the dispute was between GCC members, Iraq, Kuwait, the United Arab Emirates, so on and so forth. So this eclipse coming up is probably going to bring this Qatari situation to a head, but this eclipse is not as dreadful as that 1990 eclipse that was square Pluto on one side and Mars on the other. This one is opposite Mars. So you're probably going to have a big flare-up of conflict between Saudi Arabia, Iran, the other GCC members against Qatar, and that I think will all come to a head in August. And I've already mentioned, as we know, I'm going to send you a report sometime in the next week. And if anybody wants it, they can send me an email at bill@cyclesresearch.com, in which I'm putting all of this stuff in one report with all the maps and charts and Trump's chart. And of course, as you know, we mentioned before, the eclipse is on his Mars. And so I think one manifestation is going to be he's not going to tolerate any violence. He may call out federal authorities. That's number one. Number two, there's certainly the possibility of an attack upon him, which I think he'd survive. And on top of that, he may just very well take military action against North Korea or Iran. Iran, I really don't know what they would do, because I spoke to people in the Middle East, because the guy who lived next door to me was he was the military attaché from America to the UAE government. And on the other side, I had David Hurd, who's a British agent who's been down there since the 60s. And, they've taken their nuclear program and supposedly spread it out all over the place, making it hard to hit. But it's easy to hit for the following reason. They in Syria use a very old Russian air defense system. And it's so old that the supercomputer in the Pentagon, these jets fly in it. Do you remember when Israel bombed the Syrian nuclear facility that was being built for them by North Korea years ago?
Oh, that was in 1980.
No, it was much later than that.
Okay.
Well, anyway, they fly in. They pick up the signals from the old Russian radar, it goes back to the Pentagon computers, and they can shut it off, throw up multiple bogeys, be completely invisible. So in other words, they have virtually no defense against any air attack. And it's something, of course, they're not going to talk about a lot because they don't want people to know it. But so, there may very well be some sort of an attack on Syria, on North Korea, because North Korea is supplying a lot of this to them.
Hey, listen, my friend, I want to let you go now because you're under the weather, and I really want to thank you for answering the call, Bill, because I know you wanted to come on, but I didn't know you were this sick. Otherwise, I would have made another day. But okay. Hey, thank you, my friend, and I'll give the folks all the information when our break comes up, okay?
Oh, yeah, and we do have July 27th. We have an eclipse presentation online. The information is up at the end.
I'll cover that. July 27th. I remember that date. I'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I posted the Timer Digest results from last year from Bill Meridian. As you can see, he was number 1. Also, you'll see that we've had Stan Harley, number 3. He's a regular guest that we have. Some of these other folks, I know who they are, but don't have them as guests, but that's neither here nor there. But what's so interesting about Bill is that he does not only technical analysis, he's very, very good with the astrology. I had personal experience with this with him back in 1985. When I first met him, I was born in a very small hospital in Indiana, Clinton, Indiana, a little 40-bed hospital that burned down a few years after I was born. And I didn't know the exact time of my birth. My mother had passed away, and my aunt told me that it was late at night, and she didn't know the exact time. And so I asked Bill if he could help me, and he, along with his friend Victoria Martin, who's been our guest here, both came up within 5 minutes of the exact time I was born. And that was 11:05 p.m. to 11:10 p.m. And they do that by the critical things that have happened to you in your life, the birth of your children, your death of your parents, other things like this. They put it together, and that's how they come up with it. That's why, and believe me, it is so, no, I had nothing to do with burning the hospital down. But I really don't understand how it works. All I can tell you is that there's something there. It's all psycho-related, and don't take anything, personal about this stuff, because it's just a way of looking at the different cycles. And this has been going on for thousands of years. If you read any type of research at all, you realize that most of the really great astrological works from antiquity are in the Vatican vaults. And they were taken out of the Bibles back in the Council of Constantinople in 330. It was the Council of Nicaea in Constantinople in 335 A.D. So that's it. We'll be back tomorrow. Live every day in an attitude of gratitude, and may God bless. And we'll have Norm Winsky tomorrow.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.